Hello and welcome to gotstockz. Today is Wednesday, June 12th, 2024. Today we're going to be talking about Apple, ticker symbol AAPL. We're going to look at some of the fundamentals and then we're going to look into the charts. So here we go. So the WWDC24 introducing Apple Intelligence AI for the rest of us and expecting updates coming with some of their products moving forward. Apple Intelligence, the next big step for Apple is here. Apple Intelligence is personal intelligence built into your devices to help you write, express yourself, and get things done effortlessly every day, all while setting a brand new standard for privacy and AI. So currently, this is the Apple stock. The current market cap for this company is $3.3 trillion. The PE ratio is 31.85, which relative to a lot of other stocks, this is still on the low end, even after this move. So take a look at some of the other stocks and their PE ratios. That's the price to earnings ratio. Here's today's volume. Here's the average volume. This is very important. The average daily volume is 62 million shares approximately. That's how many shares trade throughout the day each day. Today's volume is 167 million. That's not you and I buying 1,000 shares. That's the big institutions that are funding the ETFs, the Roth IRAs, the 401ks, you name it. That's the big money coming into this stock, and this is what we need to pay attention to, so we're not playing the guessing game. We're going to follow the big money, and we're going to look at the big money, but you have to look at the big money through technical analysis in the charts. What I want you to look at is this area right in here. Look at the volume bars, and we're going to dig into this in another chart here shortly. I just want to briefly go over this with you of what's going on. This is of extreme magnitude and something that we need to pay very close attention to if we want to make a substantial amount of money in the stock market. So here's just to list a few of some of the ETFs that hold Apple stock. We have the VTI, the VOO, the SPY, the IVV, the VUG, QQQ, XLK, VGT, IWF, and the IVW. And the first one we're looking at is the VOO. So this is the VOO. This is the Vanguard S&P 500 ETF. This is the top 10, but we're just going to look at the top 5 holdings inside of the VOO. Microsoft, Apple, Nvidia, Amazon, and Google. Apple, 5.84% is held in the VOO. Microsoft, 6.84%, Nvidia, 5%, Amazon, 3% and change. So Apple is 5% of the VOO. And Apple has not participated that much in the past year. And we're going to look at that with technical analysis here shortly. When we look over here to the sector weightings, you can see technology is 30% and change, financial services 12%, healthcare 12%, consumer cyclical 10%. Communication services 9.14%, and the list goes on and on. So if you're looking for a diversified portfolio, this looks pretty diversified to me, and it's 500 companies. Now we are going to look at Vanguard Mega Cap Growth Index Fund, the MGK. This is the top 10 list. But the top 5, Microsoft, Apple, Nvidia, Amazon, Meta, similar theme, technology, consumer cyclical, communication services, healthcare, financial services. You can see in this one, it's a little bit heavier on the technology side at 50%. That in a market correction, a downdraft, a consolidation period, this type of fund versus the VOO is probably going to retrace a little bit more on a percentage ratio basis versus the VOO, because this is technology heavily weighted. but it also means that in a bull market, which we are currently in, you're going to get better returns overall. This particular one, Microsoft has 14.3%. And then we have Apple, 12.42%, and then NVIDIA at 10%. So here's another thing to consider, that NVIDIA for the past year is up several hundred%. You know, Google, Amazon, Meta, they're all up over 100% in that range, a little more, a little less. Apple was underperforming. Let's take a quick look at the VGT. This is the Vanguard Information Technology Index Fund ETF shares VGT. The net assets are $80.3 billion. The yield is 0.68. Then we also have the expense ratio is 0.10. Look at the technology, the sector weightings, 99.25%. In the technology field, we have Microsoft leading the way at 17.3%. Apple, number 2, at 15.29% of the weight of this ETF is in Apple. NVIDIA, 11.91. But look at the top 3 here. Look how heavily weighted they are. What that means in a bull market, when technology is taking off and technology is on fire and just to the moon and making a ton of money, these 3 stocks are going to lead the way. Now, Apple has not been leading the way until recently. That we want to keep our eye on this and on the pullback. Is this a big breakout that's going to hold this market up going forward for the next few months? Technical analysis will give us that information. This is a 5-year weekly chart. So 5 years ago, the stock was trading at $48.04. Today's high is $220.20. If you look at the past 5 years, this stock has been in an upward trend. And then this was the participation of our bear phase market in 2022. So here's 2023. It was up from January all the way through this area, while the market was continuing in a bullish phase and going upward. Apple did not participate, but Apple is late to the game, but here we are. They've broken through the resistance ceiling. Look at the S&P 500. The S&P 500 has just been in an upward trend. We had our little retracement here, but for the most part, the S&P 500 has been in an upward trend. Take a look at Apple compared to this. This chart we're looking at right now is a 1 year, 1 day chart. Each candle represents 1 day. The white line represents a 10-day moving average. The purple line represents the 21-day moving average. The green line represents the 50-day moving average. And the red line represents the 200-day exponential moving average. It actually hit its low here not too long ago here, and here we are there. So the market basically in Apple was down. It was all over the place. It's up, and then it's in a downdraft. This gap up is our earnings right there. Now we're going to zoom in on this a little bit closer. Here we go. Earnings estimate was $1.50. The actual was $1.53, and the stock gaps up. So the average volume was 60 million range. This gap up is 163 million. This is an analogy. 100 million more people come into the store and buy one stock. 100 million. That's substantial. That's not you and I buying That's the big boys. That's the Merrill Lynches, the Fidelities, the Schwabs, all the big institutions. And there's many, many more of institutions out there, and a lot of ETFs that have a heavily weighted position of Apple in their portfolio. They did not participate in this AI movement, but now they've made their announcement and they are participating. So when do we want to get in? We want some of this action. I want to make some of this money. Microsoft, Meta, Amazon, Google, they've all participated in nice uptrends and have done very well in the past year, and Apple has not. But Apple's story turns around on their last earnings. They gap up, and here we are. This is the announcement of their Apple Intelligence, and the street and the investors like what they heard. Yesterday, the volume traded at 172 million shares. Today's volume, 193 million. This is a good opportunity. Let's take a look at when we want to enter this. So if we're looking at Apple for an entry point, we're going to look at the 10-day moving average, the 21-day moving average, the 50-day moving average, and possibly the 200-day moving average. Typically, if a stock in a healthy upward trend will trade its 10 and its 21-day moving average and occasionally break and touch the 50-day moving average. When a stock starts trading below the 50-day moving average, you can just stay out of the way because it typically goes to the 200-day moving average, and then you can start looking at it. So these numbers will change. This is just a guideline of it. Wait a little bit because this thing is extended. It's going to pull back when either the moving averages will catch up to the price of the stock, it'll slow down, it'll start consolidating, and the moving averages will move up and it will catch up to the stock, or the stock will retrace and have a sell-off period. And that's where you want to pay attention to the volume, because volume gives us all the information. The 21-day moving average, if you want to look at 193.65, is currently a good entry point. And then if we go down to the 50-day moving average, we're looking in the range of 186.40. So what I want to do now is I want to back this out. Let's see what 6 months looks like. 6 months is good. So we're going to draw an area. Let's draw a line from here. 199.62, and then the peak of this. These are areas of interest to enter the stock. Let it pull back. It looks like the stock had a sell-off at the end of the day. Of course, the Fed speaks, the stock sells off. So let's see what's going on here. We sold off. Okay, this is good. It's just at the end of the day sell-off, probably based on what he said with the interest rates. But that's okay. We've got a lot of volume coming into this, trading at all-time highs. This is clearly a major breakout. Over $3 trillion global company. I like it. I like what I see. I love the company. I love the products. I use all their products. I'm not biased. I go by the charts. I wanted to buy down here in the 164 range, but I was waiting for the earnings and they gap up. I was waiting for a pullback. I didn't get the pullback and the stock takes off without me. That will complete our analysis of Apple. Hopefully this information is helpful for you. Do your due diligence. Don't be in a hurry. Don't have FOMO, fear of missing out. Always dot your I's and cross your T's. And don't forget the Z. God bless and happy investing.